Welcome to Vibe and Vision channel. Today we're diving into the top 10 assets that can make you rich. Whether you're looking to build wealth or diversify your portfolio, these assets have proven their worth over time. Now, before we get started, I want to be clear. There's no magic shortcut to getting rich quick. Building wealth takes time, effort, and smart decision-making. But by understanding these asset classes and how they work, you can set yourself up for financial success in the long run. We'll explore the pros and cons of each asset, so you can make informed decisions based on your own financial goals and risk tolerance. Remember, diversification is key. Don't put all your eggs in one basket. Let's get started. Real estate is a classic wealth-building tool for a reason. Everyone needs a place to live, right? As populations grow, demand for housing increases, driving up property values. Real estate can also generate passive income through rentals. Imagine collecting rent checks every month. That's the beauty of being a landlord. But it requires a significant upfront investment. Down payments, closing costs, property taxes, it adds up. Plus, maintenance costs and the risk of troublesome tenants. And market fluctuations. Real estate values can go up and down. Remember the 2008 housing crisis? Not pretty. Do your research, understand the risks, and invest wisely. Let's talk about the stock market. Stocks have historically generated an average annual return of 7 to 10%. Buying stocks means owning a small part of a company. As the company grows, your shares can increase in value and you might receive dividends. But the stock market can be volatile. Prices can fluctuate due to economic news, company performance, and investor sentiment. Diversification is crucial. Spread your investments across different sectors and asset classes. Remember, investing in the stock market is a marathon, not a sprint. Now, let's move on to bonds, often considered the more stable, reliable, older sibling of stocks. When you buy a bond, you're essentially lending money to a government or corporation. In return, they promise to pay you back the principal amount, plus a fixed interest rate over a specific period. This fixed income stream can provide stability and predictability to your portfolio. Bonds are generally considered less risky than stocks, especially in the short term. They're less volatile and can provide a cushion during market downturns. However, this stability comes at a price, literally. Bond returns are typically lower than stocks, making them less appealing for investors seeking aggressive growth. Think of bonds as the tortoise in the race against the hare. They might not win the speed race, but they offer a slow and steady approach to wealth preservation. Bonds can be a valuable addition to a diversified portfolio, especially for those nearing retirement or seeking to balance out riskier investments. Chapter 4. Mutual Funds and ETFs Investing Made Easy. Let's face it, not everyone has the time, knowledge, or desire to research individual stocks and bonds. That's where mutual funds and exchange-traded funds, or ETFs, come in. These investment vehicles pool money from multiple investors to invest in a diversified portfolio of assets such as stocks, bonds, or real estate. Think of it like a one-stop shop for instant diversification. You get exposure to a basket of assets without having to pick and choose each one individually. Mutual funds and ETFs are incredibly accessible, even for beginners. They typically have lower minimum investment requirements than buying individual stocks or bonds. However, it's important to remember that you're paying a fee for this convenience. Mutual funds and ETFs charge expense ratios, which are annual fees deducted from your investment returns. While these fees are generally small, they can eat into your profits over time. Be sure to compare expense ratios before investing in any mutual fund or ETF. Chapter 5. Businesses, from side hustle to empire. Now we're getting into the exciting world of entrepreneurship. Starting a business or owning equity in a successful company can be incredibly rewarding, both financially and personally. When you build a successful business, you're creating something from scratch, providing value to customers, and potentially generating substantial wealth. Think about it. The founders of companies like Apple, Amazon, and Google became billionaires by building innovative businesses that disrupted entire industries. But let's be real, starting and running a business is no walk in the park. It requires hard work, dedication, and a high tolerance for risk. You'll face challenges, setbacks, and long hours. Not every business succeeds, and many fail within the first few years. However, for those with an entrepreneurial spirit, the potential rewards can outweigh the risks. Even owning a small business or having equity in a startup can generate significant wealth if it takes off. Chapter 6. Intellectual Property. Turning ideas into assets. In today's knowledge-based economy, intellectual property, or IP, is more valuable than ever. IP refers to creations of the mind, such as inventions, literary and artistic works, designs, and symbols used in commerce. Think patents, copyrights, and trademarks. These legal protections give creators exclusive rights to use, sell, or license their IP. For example, imagine you invent a groundbreaking new product and secure a patent. You could license that patent to other companies for a royalty fee. Chapter 7. Precious Metals, Glittering Safe Havens. For centuries, precious metals like gold and silver have been considered safe haven assets. They've been used as a form of currency, a store of value, and a hedge against inflation. During times of economic uncertainty or geopolitical turmoil, investors often flock to precious metals, driving up their prices. Think of it as a flight to safety. Unlike paper currencies, which can be printed endlessly by governments, the supply of precious metals is limited, making them less susceptible to inflation. However, it's important to note that precious metals don't generate any income. They're not like stocks that pay dividends or real estate that generates rental income. Their value is primarily derived from supply and demand dynamics, which can be influenced by factors like investor sentiment, central bank policies, and global events. While precious metals can play a role in a diversified portfolio, it's crucial to understand their limitations and not go overboard. Chapter 8. Cryptocurrency, the Wild West of investing. Buckle up, because we're entering the world of cryptocurrency, the digital gold rush of the 21st century. Cryptocurrencies like Bitcoin and Ethereum have exploded in popularity in recent years, attracting both seasoned investors and curious newcomers. These decentralized digital currencies use cryptography for security and operate independently of central banks and governments. The allure of crypto is undeniable. We've seen Bitcoin skyrocket in value, turning early adopters into millionaires and in some cases billionaires, practically overnight. But here's the reality. Check. Cryptocurrency is incredibly volatile. Prices can swing wildly in either direction, driven by factors like regulatory news, technological advancements, and even Elon Musk's tweets. Investing in crypto is not for the faint of heart. It's crucial to understand the technology, the risks, and the potential rewards before diving in headfirst. While some view crypto as the future of finance, others see it as a speculative bubble waiting to burst. Chapter 9. Collectibles, from vintage cars to fine wine. Now let's explore the fascinating world of collectibles, where passion meets potential profit. Collectibles encompass a vast array of items, from vintage cars and rare stamps to fine wine and antique furniture. The value of collectibles often lies in their rarity, historical significance, and desirability among collectors. A pristine 1967 Shelby Cobra, for example, can fetch millions at auction, while a rare Honus Wagner baseball card can be worth more than a house. Investing in collectibles can be a thrilling experience. It's an opportunity to own a piece of history, indulge in your passions, and potentially profit from your expertise. However, it's essential to understand that the collectibles market can be illiquid. Finding buyers for highly specialized items can be challenging, and you might need to wait years for the right opportunity to sell. Moreover, authenticating and valuing collectibles can be complex, often requiring specialized knowledge and expertise. Chapter 10. Education and skills, the ultimate investment. Last but certainly not least, we come to the most important asset of all, you. Investing in your education and skills is the foundation of wealth building. The more you learn, the more valuable you become to employers, clients, or customers. A college degree, vocational training, or specialized certifications can open doors to higher-paying job opportunities and career advancement. But it's not just about formal education. Continuously developing your skills, staying ahead of industry trends, and expanding your knowledge base are essential for long-term success. Think about it. In today's rapidly evolving job market, the skills that are in demand today might be obsolete tomorrow. That's why it's crucial to be a lifelong learner, constantly seeking out new information, developing new skills, and adapting to the changing demands of the workplace. Remember, investing in yourself is an investment that pays dividends for a lifetime. Outrow, building your wealth legacy. Thanks for watching. We've covered a lot of ground today, exploring 10 different asset classes that can help you build wealth. Remember, there's no one-size-fits-all approach to investing. The best assets for you will depend on your financial goals, risk tolerance, and time horizon. Diversification is key. Don't put all your eggs in one basket. Spread your investments across different asset classes to mitigate risk and maximize your chances of success. If you found this video helpful, don't forget to like, share, and subscribe for more content on building wealth and financial freedom. Let us know in the comments which asset you think is the most important for getting rich. See you in the next video.